Okay, you guys, I want you to pay close attention to what I'm about to tell you. I really pondered on this. I had time to spend some time alone and think over my trading career, and I thought about this topic extremely hard, and it hit me like a rock upside my head. I don't know why all these years I never saw it, but I had to think back on every time I have ever, I don't care whether I was a beginning trader or whatever, it didn't matter. Every time I have ever blown an account, prop firm account, it doesn't matter what kind of account. An account is an account. Every single time I have blown an account, I'm going to take you to the charts, so watch what I do, okay? Watch what I do on these charts, and you'll see it abundantly clear. And it's like we all know this, but it didn't dawn on me, okay? Every single person I have ever known, every single person who I have ever traded with, every single time I have actually blown an account and sat there crying and upset about it, every single time it was due to one thing. One, here we go. Let's go to the charts and let me show you what I mean. And I was recording this before and something happened, so I'm recording this again. All right, so I'm just going to pick a random pair, okay? Why? The market's had a terrible day. Look at that. Oh, my God. Look at that, okay? This is the US 30. This is the NASDAQ, so we'll just pick something random, okay? So either way it goes, the market had a very, very bad day, okay? And so here's where we are in the markets. So let's just say we're going to pick a Euro USD, okay? Let's just pick Euro USD for an example. Now, let's just say, okay, I'm going to go ahead and take a buy trade on this, do my analysis. I see it sitting on support, even though this may go through, but I'm going to do my analysis. I say, okay, right here, I want to buy the trade. Here's what happens. You get a prop firm account, or you get excited with your strategy and you put some money into your trading account, or you got a prop firm account. Here's what happens. You promised yourself that you would not make this simple mistake, all right? So first of all, let's look at how much my balance is. My balance right here, and this is the classroom account, so I don't really care. We use this in the classroom. So right here is saying basically we got $4,000 to play with in this account. Okay, so what would be the appropriate amount I should be taking on this trade? All right, let's not take the appropriate amount. Let's take what we always feel like taking. Okay, why? Because we're trying to hurry up and price a prop firm account and so forth and so forth. So I'm going to put 4 standards on here. Okay, 4 standards, $10 a pip, it's $40 a pip, and look at here. All right, so let's do a 30 pip stop loss just to be on the safe side. 30 pips is right about there. Okay, we're at 30 pips. So how much do I have in my account? I got how much? 4,000. How much am I risking on this one trade? $1,200 of the 4,000. Okay, watch this. Let's do some math. Every time, I literally thought about this today. Every single time. Don't tune me out saying, "Oh, I know that already." Watch when I get to the end of this. So $4,000. Okay. Minus 1,200. At least 2,800. Okay. How many of these 1,200s? Well, let's divide that by 1,200. So only got 2 trades left with the balance. So technically, with this way of trading, I only have 3 trades before I'm out of the game. Now, what if I would have did the right thing, controlled my behavior, and simply said, okay, you know what, man, I'm feeling Uncle P. He absolutely right. Truth is, I already knew with this, just drop a 0. Just keep the number simple. You got 44,000, drop a 0, okay? That's still a high amount, but let's just do it that way. So 40 cents on that trade, okay? Still going to use 30 pip stop. What's the risk now? $121. Now watch this. We're going to do some math. $4,000 divided by 121. How many trades does it take for me to blow the account down? 3 trades? No. 33 trades I would have to lose in a row. 33 trades in a row. That means you have to be the worst trader on the planet, throwing blind darts. And even some of those are going to win. Why? Because like the old saying goes, even a broken clock is right twice a day. So the point is, I would literally have to lose 33 trades in a row in order for me to blow this account. What's the likelihood of anybody losing 33 trades in a row, even if you're brand new? What was the difference then between 3 trades and then you're out of the game versus 33 trades and you're out of the game? What was actually the difference? what was actually the difference. It wasn't the trades. It wasn't the strategy. It wasn't the indicators. It wasn't any of those things that we normally focus on. It was only one thing that had ever caused me to blow an account, and that was over leveraging. And I know we hear it all the time, but for whatever reason, we still don't do the right thing. And I want you in this video to think back on every account you have ever blown. And I know you got upset saying, well, it was the this, it was the that, it was I didn't understand the markets, it was a trading system, it was a this, it was this. It didn't matter. It didn't matter. The point is, get down to the root. Why did you really blow that account? Because even if you said, okay, I took 10 bad trades with a bad trading system, and then you went over to a new one, 10 bad trades, when you have 33 of them that you could lose. 33 of them. So if you lost 10 in a row and you say, okay, that's not a good trading system, not a good service, and you moved over to a different service. If you lost 10 trades, don't that still leave you with what, 23 left? 23 more trades to go? So that means you can go over to a whole nother trading system, a whole nother service, lose 10 more, which means you went through 2 different systems, lost 20 trades in a row, and you still got money left over. So was it the trading systems or the strategies or your knowledge, or is it simply because we're getting too greedy? One last point on this. I was observing some videos because I do a lot of homework, a lot of studying, just nonstop, always studying charts, always studying this and that. But I've also been studying people who pass prop firm challenges and make a lot of money for the prop firm challenges. So here, after all this time of me just watching them, it just really hit me like a road, just like a brick. Pow! Just hit me upside my head. Do you know they always said the same thing? They all got it in common. So it's really not their winning percentage, as we all think. It's not their strategy. I mean, they got good strategies and that's cool, but across the board, there was only one thing that all of them had in common. They all used a very low amount per trade to make absolutely certain that if the trade did not work, it would have zero impact on them possibly coming close to blowing that prop firm account. That was the one singularity, if you want to put it that way. That was the one single thing that they all had in common. Every single person who's making money on these prop firms, they all had that in common. Because they all know some of these trades are just not going to work out. Today is one of those days because the markets went wild for whatever reason over the last 24, 48 hours. The market has just been going crazy. Dollar shots up. The stock market dropped like a rock. The Euro USD, AUD USD, NZD USD, all of them, they just all dropped against the dollar. The dollar hit some good news and it went bizarre. It went, what they say, catabolic, viral, whatever you want to call it, okay? It just went crazy over the last couple of hours, over the last 48 hours, okay? So everything crashed, okay? If you had lost a lot of trades, did you lose 33 trades in a row? Because if you didn't, you should still have money in your account. Now, what's a bright way of doing it? Okay, Uncle P, here's a simple number that I like to do. Because again, and this is kind of high, and most of them who had past prop firm challenges, they all stay within a 1 to 3% risk. But here's a simple way I do things. Now, again, you don't have to do it because, again, it's a little bit higher than that, but it is what it is. So, Uncle P, what would you recommend? All right, if you got a $5,000 account, you'll use 0.50 or half, 0.25. Okay. If you have a $4,000 account, you can use 0.40, or you could do half, 0.20. If you have a $10,000 prop firm account, okay, just use, 0. What is that? 1 standard. Okay. 1 standard. Okay. So even with a 30,000, let me do this so we can look and see. Okay. So you have a $10,000 account, which gives you basically $10,000, 500. Actually, no, you got to be careful because your drawdown is what you're going to blow your account on. So realistically, with a prop firm account, I would use half of that. So if you can use a 1 standard, just to say 10,000, use 1 standard, do half. Okay. So therefore, if you use half of what that is, all right. So you have a $10,000 account, but you use half of that. You still use a 30 pip, or let's say even a 40 pip stop loss. Okay. What does that look like? You're only risking $200. okay, which is quite a lot. So you can even cut that down to a quarter of that, which is 0.25, just to make sure you don't blow the account. Because again, with these prop firms, they show you 10,000, but your drawdown limit is what you got to pay attention to. Okay, so whatever that number is, that's the legitimate number. So let's redo it again. So for an example, I'm working on a $200,000 prop firm account. Okay, $200,000 prop firm account. My daily drawdown limit is like 8,000. My overall drawdown is like 10,000, something like that. Okay. So with that being said, what is the main number I need to focus on? The $8,000. Okay. So whatever I do, I got to make sure I don't blow that $8,000 because that's my daily limit. Okay. So with that being said, yes, it's a $200,000 account, which means I technically can take enough trades that would add up to 200,000 worth of money. But if it goes against me, I only have $8,000 to play with. So which number is more important, the 200,000 or the 8,000? It would be the 8,000. So now technically I got $8,000 to play with, right? So then if that's the case, take the 8,000 and then watch this. I can just drop a zero and therefore I can take a trade 0.80. And watch what this, okay, let's do a 40 pip stop. Let's put it right there. I'm only risking $323. See, I'm gonna hover over it. $328 is all I'm risking on $8,000. See, I'm not going according to the actual size that they're saying. I'm going according to what is the drawdown limit. So if I have an $8,000 daily drawdown limit, that's the number. So now let's take a look at this. 8,000 divided by $350, just round it to 350. Okay. That means I would have to lose 22 trades in a row in order for me to blow that $200,000 prop firm account. So every trade that I take with it, let's just say on average, it's going to always be around 40 pip stop loss just to give it some comfortability. So with a 40 pip stop loss, and I'm taking these trades on this account, remember my daily drawdown limit is all I need to focus on. Don't worry about that 200,000. That's the shiny coin in front of your face. But the truth is you're losing these prop firm accounts because you're not looking at the daily drawdown. The daily drawdown is where they're going to get you, because even if you're holding a trade and it goes and drawdown against you, they're going to use that against you regardless of what your daily limit is. Okay. Or whatever prop limit you're at. So for an example, you got a $10,000 account, you may be able to risk your daily drawdown maybe 5% of that, which is $500. You see my point? So, okay, if you are doing $500, taking that into account, because that's technically how much you got to play with before you get, we'll give you a coupon for a retest. So you got $500, all right? How do you do the numbers? Drop a zero. So if I dropped a zero, because you have a $500 limit, what would that number be? 0.05. You're going to have to go slow. Average 40 pips, it's only $20. No way you're going to blow a $500 account. Now, where's the problem going to be? Your patience. $500 divided by 20. 25 trades in a row before you blow that account. 25 losing trades in a row. There's zero way you're going to blow that account. So what would be the problem then, Uncle P? There's going to be one problem with what I just taught you guys. One big problem. And you say, well, what's the big problem, Uncle P? Here's the big problem. The big problem is your patience. Do you have the endurance to trade consistently, take the wins and losses, keep on climbing that account at a regular pace until you pass the challenge? Or are you just going to be frustrated because it's taking you too long and you have urgency, you got bills to pay, I got things I want to do? Okay, how many times are you going to have to go back to this restarting point? Because every time you blow an account because you're in a rush, don't you always have to start over again? How many prop firm challenges have you taken so far? How many deposits have you made so far? How many times have you blown your accounts so far and had to start right back over again? So are you making faster progress because you're blowing these accounts? Or would it have just been wise to have had one account and never have blown it? And looking back on how many accounts you've already blown, the frustration and everything else, just imagine that it took you 3 months to pass a prop firm challenge versus one new challenge every month or every week. You're blowing accounts every week. So every week you're constantly buying new challenges. And 3 months down the line, you see gave them a boatload of money as opposed to one challenge and you would have actually passed it and now you're actually going live. And that's a long time. You can cut it down shorter than that, but just doing those numbers. Which one would have felt better? 3 months of frustration and you constantly doing retests or blowing your accounts with your personal income from your job, or actually have passed the one time through consistency. That's always been the case. So I hope this video was helpful. Let me know in the comments or shoot me an email. Let me know if this video was helpful. But literally, that is the only reason I've ever blown accounts. It wasn't strategies. It wasn't indicators. It wasn't trading system signals, this and that. It was always because I put too much on every trade. Every time. And I've been trading for many, many years now. Okay? All right.